Hello, everybody, and welcome to our weekend update. We're going to be looking at ahead for the week coming up. In today's video, we're going to be checking out our earnings as we always do. We've still got some more earnings coming, some interesting companies reporting this week. On the economic calendar is actually pretty light, but there are two really important ones, the services PMI and the PPI, Producer Price Index. So we'll take a look at that and the rest of the calendar there. Globally, we had OPEC meetings this weekend, and I'll fill you in on what's going on that when we take a look at oil. Also, China, as always in the news, a couple of things going on. We'll talk about one of them when we get to Apple, but more generally, I'll just let you know now that it's looking more and more like China's COVID zero policy is out the door now. Xi over the weekend was at talking to some European leaders and apparently saying that he realizes that. The Omicron variant is not as deadly as previous variants, and that requires an adjustment in their policies. So I think we could see a big day for Chinese stocks overnight tonight and into tomorrow, which I think would also be really good for our market too. So that's another interesting thing to watch out for, tonight and tomorrow. Regarding our markets or U.S. markets, we're right at a downtrend line, so right at resistance. But it's really interesting, the way we've come into it. I think this is a beautiful setup for us to break through. I'm getting quite bullish on what may happen next or this week. So we'll take a look at that, of course. We've got a few setups. We're a little bit light on setups, I think. We'll look at a couple of the setups that we were watching last week. They made some nice moves. We'll look at some new setups, but like I said, a little light, and that's because we had a kind of a choppy week, and we had some big moves and stuff. And when that happens, it tends to break the charts a little bit, and then we need a few more days to actually get some setups going again. But there is definitely stuff here for us to look at. So let's dig right into this. But before we do that, as always, please go smash that like button if you would. And let's get into our disclaimer. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading decisions are your own and done at your own risk. All right, so here's our earnings calendar for the week. Nothing terribly interesting on Monday. Tuesday morning before the open, we've got AutoZone. I think that one will be fairly closely watched. That could be an interesting intraday play. After the close on Tuesday, we have MongoDB is probably about the most interesting one there. There are some others here, some other names that may interest, some of the members. Maybe Zora. I know we've looked at that before. Toll Brothers, if you're into housing. If you like guns, then maybe Smith & Wesson appeals to you. On Wednesday, before the open, I suppose Campbell Soup could be interesting. It's one of those staple stocks that, this is a little piece of a lot of people's portfolio. But after the close, probably one of the most interesting ones all week will be GameStop, of course. That got a little movement later in the week. Heading into earnings. So, be interesting to see what happens here. On Thursday after the close, we've got some big names after the close on Thursday. We've got Costco, huge name. That had a little pullback the last couple of days. So it'll be interesting to see how this reacts now heading into earnings next week. Lululemon. Another one that's very closely watched. Always seems to, if I remember correctly, react well after earnings. So this is something we might want to maybe look for an options play, as we head into earnings. DocuSign, another very closely watched one. And then, there's some others here even. Broadcom, Chewy, Restoration Hardware, all well-known companies. So that's about it for our earnings. On the economic calendar, remember, like I said, it's kind of quiet this week. On Monday, we have the ISM Services PMI. PMI stands for Purchasing Managers Index. This can be a bit of an inflation measure, so that's what makes it closely watched. And with the inflation in the services sector seems to be a little sticky at the moment. So this will be closely watched on Monday. This is quite important. And also now the Fed is in a quiet period as we head into next week's FOMC rate meeting. So that rate meeting is Wednesday, a week from Wednesday, is when they'll make their statement. But from now through then, we won't have any more Fed speak, which I think is awesome. They just, those guys, when they talk, they just chop up the markets. And, you can have some really nice intraday plays going on. And, the market will just reverse course off of one little statement from these guys. So I'm looking forward to this next week and being able to get some day trades going and not have to worry about what some guy is going to come and say and wreck my trade. So that's all week and into next week. Until Wednesday, we won't hear anything out of the Fed. Tuesday, there's nothing at all. Nothing to watch on Tuesday. On Wednesday, labor costs, not very important. Oil inventories, crude oil inventories, we get that every Wednesday. Not particularly important. I do like to play that number when it comes out, just for a scalp. So, I'm always watching that number. On Thursday, we have unemployment claims, as we always do on Thursdays, but that's the only data we have on Thursday. And then on Friday, we have PPI, the Producer Price Index. That's an important number. Again, another number that gives us a hint at inflation, and of course the health of the economy. And we're in this weird place in the market where, if a number comes in good for the economy, that means it's bad for the stock market, because that means it could encourage the Fed, to raise rates more or faster. In this case, coming up at the next meeting, we're now expecting a 50 basis point rate hike. Even after that jobs report on Friday, we're still expecting a 50 basis point rate hike. But if this ISM Services PMI on Monday or the PPI on Friday come in really hot, that will get people talking about a 75 basis point rate hike again. Also on Friday, we have consumer sentiment. Again, consumer sentiment, good sentiment is great for the economy. Bad sentiment is probably, or slightly bad sentiment is probably good for the stock market. So that's where we are with economic data. Let's dig into our stock market here. We'll look at the major indices, some commodities. We'll look at all the sectors, of course. And we'll look at some setups. So let's dig into these charts. All right, this is the S&P 500, the SPY ETF. Okay, you can see, I want you to make note of this downtrend line. Okay, I'm actually going to increase the thickness on that a little bit, because this is getting pretty important, this line, I think, and you can probably see why now that I've really highlighted this line. So going back, this downtrend line started almost a year ago, pretty much today, exactly 11 months ago, on January 4th, and you can see we've never been able to get through it. We've had a few good touches on it now. Now, what is really interesting to me is all this price action from, this week. Powell on Wednesday was fairly dovish compared to the way he has been lately. He pretty much said we're getting a 50 basis point rate hike. And that gave us this big green bar. And then the following day, we gapped up, we went up, we touched this downtrend line perfectly, like to the penny, and started to pull back. Not terribly surprising. I was a little surprised at the time, and I really shouldn't have been, because we had really important data coming the next day. We had the non-farm payroll data the next day. I thought we'd follow through better on Thursday, but in retrospect, yeah, not surprising that we had kind of an indecisive day, pulled back a little bit after tagging that line. And you can see that now on Friday, we gapped down a lot on that non-farm payrolls data because that data came in hot. Okay, good for the economy, bad for the stock market because, you know, when these numbers come in hot, it looks like it encourages the Fed to raise rates. But what's really interesting is how this turned green. And a lot of these non-farm payroll numbers have turned green after their initial reaction, over the last few months, since we started putting in this bottoming pattern, really, which is quite interesting. And I want to quickly go look at the intraday chart on this because I think it's important to see, you know, how the market changed, right? So if we back up here a little bit, there, okay, so there is our pre-market action on that number. I mean, look at look at how much we dropped down as soon as that number was released. Okay, but as we move through the pre-market, we can see we come down, try and test those lows again, and then we start moving up. And then as soon as we open, we get a big green candle, which is, you know, really interesting behavior, isn't it? Of course, we pull back, fairly quick. Didn't pull back that much, though. And then we just go into essentially what was an uptrend all day long. Okay, came down for a little more test here mid-afternoons, pretty common. We got strong into the close, a little bit of pullback, late in the day. Again, fairly common, especially on a Friday. Strength, continued strength here. So that's telling us that market didn't, that number wasn't so bad for the market, was it? It knocked it down really badly, but it found buyers. They came in, they bought the dip, and they continued to buy the dip all day long. So they completely shrugged this off. This is really bullish for next week. Now, again, we have Monday morning, we have, some important data, and that could change things. But if that data comes in favorable to the market, I could easily see us gapping up right onto this trend line and breaking through it. I think we've got a really good shot of moving away from our 200-day moving average. Now, it's hard to see in here. There's a lot going on in here. I'll zoom in. The 200-day moving average is this dark orange line. You can see that even, when we pulled back on Thursday, we came down almost to that 200-day moving average and bounced off it. Okay, same thing. We cut through it on Friday, but we fought back nice. I think we got a really good shot of moving away from this area. And moving up into our next resistance zone, which would be around 415, or perhaps, this gap here that is still halfway open. I think we have a lot of potential right now, and you'll see a lot of stocks that look similar to this, where they're coming into their downtrend line, they're flirting with their 200-day moving average. And if we start picking off those downtrend lines and those moving averages, we're going to see an across-the-board rally, and it could get quite strong. One other thing I wanted to mention, because you're probably starting to hear a lot about the Santa Claus rally. Technically, the Santa Claus rally is between Christmas and New Year's. Traditionally, that's when Yale Hirsch first started talking about the Santa Claus rally back in I think it was in the 60s or 70s or something. A long time ago, he saw this pattern. It was only between Christmas and New Year's. Now, that period between Christmas and New Year's has not been so great the last decade or so. If you had played, if you take it as the entire decade, then yes, it was up. But there were more down weeks after Christmas than up weeks. So it's not the big rally that people think it is. However, the media has jumped all over this, and now everybody thinks that all of December basically is the Santa Claus rally, and there is some truth to that. The weeks leading into Christmas tend to be fairly strong. And then after Christmas, we do occasionally get some of that tax loss selling. So there we are. That's my thoughts on the Santa Claus rally that you were no doubt hearing about. Okay, let's move to the NASDAQ. We'll look at, whoops. So this is the QQQ ETF that tracks the NASDAQ 100. And you can see that on Wednesday after Powell, we came right into this resistance level at about 293. Popped above it briefly on Thursday, had the same kind of gap down, and we're right back up to that resistance level. Now, the NASDAQ is still a ways off its downtrend and 200-day moving average. So it would be nice to see this play a little bit of catch-up here. Let's take a look at IWM. IWM, the Russell 2000 small caps. Very similar action to the NASDAQ. We had recently fallen out of this channel. I think I need to adjust. Definitely need to adjust what's going on here, I think. I think that's probably, maybe if that one is, nah. We'll come here. That looks like a better fit there. And we'll just get rid of the top of that. There we go. That cleans that up a bit. Okay, you can see obviously, you know, we've got an area of major resistance here. We're right at it right now, and again, this market just seems primed to break out above this. It would be really nice to see, you know, once we break out above this pivot right here, then we confirm this higher low, and a series of higher lows in an uptrend. This is still a short-term uptrend, but it is, nearing the place when we can start calling this, intermediate-term uptrend. I want to go see it attack this former gap. Actually, we can get rid of that gap. That was a long time ago. A little bit of minor resistance here. I'd really like to see it get through this week. It'd be really nice to, to confirm, because you can see we are above the downtrend line. It'd be really nice to confirm that, yeah, that is the right thing to do. We're above that line. That downtrend is done now. We need to get up in here, up above this 192 area to confirm that, I think. Because we're still kind of like, RSI divergence it's really minor, but it is still there slightly. Okay, let's take a look at our volatility index. We are below 20. We're even below these pivots that I was watching last week, and I think we're below, yes we are below this one as well. I'm a little surprised we got below that. Well, we're right at it. Okay, good enough for me. Now, I want to point something out here. One of the things, the volatility index is, kind of a strange beast. Generally, if you buy the indices or you buy stocks when the volatility index goes above 30 or 34, somewhere in the mid 30s, somewhere in that area, if that's when you're buying stocks or buying an index, you do quite well. This year, that will have worked nicely as long as you covered any time the volatility index got below 20. So if you were playing that system, you would be covering, or closing out your longs now, and you might even be considering going short. I think, I hate to use this phrase, but I think this time may be different. What usually happens, again, this year has been different, right? We've been in a bear market this year, but when we were in bull markets, typically the volatility index is below 20. When the volatility index is below 20 is a great time to be buying stocks, and you want to sell those stocks when volatility goes above 20 and not buy them back again until until volatility is back above mid 30s. So we're at a really interesting spot here. I'm bullish, obviously. I think the market's going higher, but there are bearish voices out there, and this is something to be aware of. This is a big red X against the bull thesis. How volatility has behaved in the past, and you can see that all of this here, when we got down into this area, volatility went back up as the market rolled over. So it is something to be aware of. But like I said, I think we've got a really good shot of breaking out here, and if we do break out, we will see volatility come down even lower. All right, let's look at our 10-year yield. This is another reason that I'm bullish, right? 10-year yield continues to come down. Now, you know, we're not as volatile as we used to be. I mean, we were volatile on Thursday, obviously. Big gap down here. And that's another interesting thing, right? The 10-year yield. So on this... this was after Powell. That's right. Bond market is closed by the time Powell was speaking on Wednesday. That's why it gapped down like this on Thursday. You can see we also had a bit of a gap down. We popped up and we pulled right back again on Friday. If that's our action in yields after that payrolls number, this confirms what we saw in the equities market. Okay, you know, it went up, it pulled right back again, confirming that, you know, the equities market has shrugged that off, and so did the bond market. So really interesting action here. We are right at support. So again, this is if you're bearish, you can, you know, point to this. Hey, you know, these yields are at support now. You've got the 100-day moving average there. Yields should bounce there. And technically there's a lot of truth in that. So that's why we're going to be watching this area really closely, because it is potential support. If we break down through here though, that is very bullish for equities. All right, where are we going next? Oh yeah, let's look at the dollar index, because this is looking good for equities too. I really thought, now, I mean, even though we had, you know, we are definitely in a short-term downtrend now. You know, we had all these bear flags and they kept breaking down. You know, even though this bear flag here, it should break down. I didn't think it was going to. I really thought that, you know, the dollar bulls were going to get it together and bounce it here, because we had this 200-day moving average here. We had a potential support line, but it broke through this. This is great. It did exactly what it's supposed to do. So as long as we see this dollar continue to fall, all systems go. Again, bullish for equities here. All right, let's take a look at our, speaking of bullish for equities, our dollar cost averaging system. You know, you can see we turned green here in the SPY a few weeks ago. It continues to be green, of course. Firmly holding above the 20-week moving average, looking really nice here. If we look at the Qs, oh, that's right, the Qs had been stubborn and not able to go full green, and they have now turned full green. We are just barely above the 20-week moving average, which is turning our dollar cost averaging system for the Qs green. So if you've been waiting to start averaging into your QQQ ETF or any of the tech ETFs, you can turn that system back on. And of course, IWM continues to be green. This is the first one to turn green, and you know, looking quite nice here, riding along that 20-week moving average quite nicely. All right, let's go over to some of our commodities. We'll take a look at gold. You know, I've been talking about that 1800 level in gold, and broke through it today after that pullback. You know, we've been watching this, right? And weren't surprised when it pulled back from 1800. Wasn't too surprised when it bounced right here off the 21-day moving average and the 100-day moving average, and it had a really strong move up. I'm a little surprised by how you know, this went through this after being kind of stretched here, and you know, got through that quite nicely, got through that 200-day moving average. Little bit sketchy on Friday, but still holding above 1800. You know, this could, now that this is holding 1800, if it continues to hold, could go much higher quite quickly. We should watch out for this volume node right here, about 1850. Potential resistance level in there. You can see we've had a lot of consolidation in around centering on that level. So let's get that line in. So that is definitely something to watch out for if you're going to be playing. Whoops, not up there. Here is where I wanted to look. There, we need that one, and we probably need to mark in that one as well. Okay, some levels for you to watch out for there is if this continues on the way up and you're playing it. The gold miners, Didn't break out quite as strongly, but you can see they did break out. They've had a nice move in here. Silver moving along with gold. Nice strong move. Look at this. Really strong, actually. Probably a better place to be than gold, actually. Copper lagging a little bit, but it's getting up and going here. It got through our first level of resistance. We really needed to see that. We've got the 200-day in this pivot here. Need to see it get above this pivot. We want to see copper doing really well. It's good for the economy. And you know that copper is going up and we're not really freaking out about rates is really nice to see. What else? DBC, the General Commodities Index, getting a little hurt by oil, but odd that it's come down this much the last couple of days with the metals moving up this much. All right, let's move into crude oil. Okay, so you can see, we had this big pullback. We moved up a little bit. Not a great day on Friday. Looked like does look like it could be ready to roll over again, put in a lower high here, and move down and potentially put in a lower low. Don't want to see that, obviously. I still have a number of oil plays, although I have been, over the last month or so, trimming back on them a little bit. But OPEC, like I said earlier, OPEC met over the weekend. They reaffirmed their production cut quota. They, as far as I can tell, this is all kind of breaking news actually, so everything's still a little sketchy, but they did not cut any deeper. But they also did not raise production quotas. Some member countries were in favor of raising production quotas because also happening right now is the EU has new sanctions on Russian oil. Those will be coming into effect on some on the 5th and some on the 9th, I think, if I've got those dates right. Don't look this up for yourself if you're planning to play those dates. But yeah, new EU sanctions on Russian oil. And no new production increases from OPEC. I think that's really bullish for oil. I think that oil has a really good chance of moving up tomorrow, and we'll get to see that later this afternoon when the futures open. Natural gas had a few big pullback days. It's broken through that trend line. A little bit surprising, and it even got through this support level here. So really interesting to see what happens next for natural gas. This may be weather related. Natural gas is obviously really sensitive to weather. So I don't know. Maybe it's sunny on the east coast of in the northeast U.S. Maybe it's been sunny there for the last few days. I don't know. I don't follow it that closely, but that could be a reason for the big down move here. XLE, the energy ETF, still kind of chopping around here in a range, narrowing in a little bit, looking really indecisive, doesn't know what to do. But again, if oil's going up tomorrow off this OPEC and Russia news, XLE, these companies in this ETF, will definitely be going up. XOP is looking, of all these energy ETFs, XOP is looking the weakest. We've got this sort of rounding top action here. It is right at support right now, but tough call. I wouldn't want to be in this right now. I closed out my position completely out of this particular ETF. I still have other oil positions, as you're probably aware, but I did exit this one because it was being weaker, underperforming the others. Not thrilled with the price action here. OIH, on the other hand, the oil services, still looking all right, kind of consolidating here. We need a new support line in around this area. Let me get that in. There we go. Actually, let's take it right off of that. Okay. So yeah, hanging out above this support line, in a consolidation between that previous pivot high and this support. Good day on Friday, and again, this will, if oil's going up tonight and tomorrow, this is definitely going up tomorrow. TAN, or solar ETF. It's kind of breaking both ways out of this pennant and getting really volatile. We got some big candles here. So it's choppy, big volatile chop. Is it going to break one way or the other? I'm not sure. And, one of the ways sometimes people play this, when they see this kind of volatility, they go, all right, I'm just going to draw a line just above those highs, and I'm going to draw a line just above these, or just below these lows, and I'll play which way it goes from there. That's one way. It's not the way I would actually play this one. I will show you some better ways to play this. FSLR. This has been sort of chopping around up at these highs. This is one that you could draw a line above, and if that breaks out of there, that's probably a buy. I think it could get a big move. One that is potentially even better is ENPH. Look, it finally broke out of this. We've been watching this line at 321.50 to 322 for a long time. It finally broke through there and did that quite strongly and with volume. This looks like it's going to continue higher. However, look at this RSI divergence. This is not something to. Oops, we'll just leave it that way. This is not something to be ignored here. We've been seeing, when we've been seeing these breakouts with this RSI divergence, that we've seen a fair bit in a number of different things lately. We've often seen a pullback to the breakout line and then a move back up. So if you like ENPH here, you might want to wait a few days, because, look, I think tomorrow this is going up. It's really hard to have a big green day like this and not have a follow-through day. It's probably going up on Monday, but I think Tuesday, Wednesday, we could see a pullback into this line. I'd be a buyer on a pullback and bounce at this line, and this is something I will be watching intraday if this happens. Because you can get a really good move off that. You can easily get a really nice intraday scalp off of this, and potential nice swing trade from that. So you don't need to chase this, I don't think. I think watching and waiting on this one is the way to go. I've got one more solar play. We'll look at that a little later on. All right, I want to get into the rest of the sectors here. XLY, our consumer discretionary ETF. It looked a little like, looks a little like the Qs here. It kind of came into resistance, pulled back a little bit, recovered mostly on Friday. This is still obviously all tentative in here, still in kind of a big consolidation range, but I have a feeling that this is really going to try and make a breakout above this resistance here. XLRE, or industrials, looking pretty good actually. I'm expecting to see some pullback in these, or at least some sideways consolidation, and I kind of want to actually, because these have been performing so well. I would like to see people take profit on their stocks in this sector, on their sort of more value-oriented industrial stocks. I'd like to see some profit taking there, because that profit would probably find its way into technology stocks, which is going to be really important to give some confidence to people in this market. Financials, kind of similar story there, right? These have done fairly well. You do have your safety stocks in here too. I'm okay with this just going sideways for now, because I'd rather see other sectors, benefit from this going sideways. XLK technology. This is the one we want to see seeing some benefit, and it kind of looks like it is, right? It's getting some good moves when there is good news, but we're right under some resistance. We've got this old gap going way back into September. Let's close that thing. Let's get above this declining 200-day moving average. Let's put some distance between this stuff. I'll start feeling really good about technology when we're above 140 here. And I mean, I'm feeling pretty good about it now. There's, reasons to be bullish. Had a breakout, pulled back to the trend line and bounced off it. This is good, but we still have work to do. Communications sector, the weakest of them all. Still in our kind of sideways consolidation, but got some bullish price action here. We do have a lot of resistance overhead though, so lots of work to do. It looks like we can pull this off, I think. If we start seeing some breakouts above some of these resistance levels, this could really get going. I think people could really get encouraged here. Meta. This was one of our setups from last week. We talked about this really tight consolidation area, especially those two candles there. Now, unfortunately, we broke down out of there, but it held held above that low. And then look at the move we had on Wednesday when we broke out above this entire consolidation, broke out above this resistance level that goes way back into the past. And we're closing this gap. I'm really kind of, I'm kind of surprised at the strength in this. And I think that we are going to continue to see strength in this. People like this stock still. It had a lot of bad news, a lot of negativity. I still don't like it. I don't think I'm ever going to like this stock. I'm probably going to be a perma bear on Meta. But when I'm looking at this chart, I'm thinking, wow, this is strong. So if you're playing this, congratulations. It looks like you've got more upside ahead. Of course, you have things to watch out for. The top of the gap here, this downtrend line, and some moving averages overhead. There is work to do, but I think this is going higher. All right, Apple. Apple is so messy, really messy chart on Apple. However, I think we might see a nice gap up tomorrow. Probably to this trend line, and then if we can get above that, I think it could be the beginning of a big move. And the reason for this is over the weekend, Apple announced, or there are rumors that or news that Apple is going to be moving production out of China. It seems like they're a little fed up with what's going on there, and they are now apparently committing to moving production out of China. I think that's big news for them if they can pull it off, because I know the market is absolutely concerned about what's been going on there. I mean, this move down here was caused by COVID at Foxconn and worker unrest at Foxconn. This has not been good for the stock. So if Apple can move into areas that are a lot more stable, definitely be good for the stock. And I think we're going to see that tomorrow. And Apple moving up tomorrow is another one of the reasons I'm bullish for the market, because Apple is such a big part of all the major indices. So let's move on to Amazon, another stock that I'm not particularly thrilled about here. We've seen some fairly bullish charts so far, haven't we? Not here though, not Amazon. This is in trouble. I don't like this price action here. If we break down below this trend line, that absolutely it's got a chance at, if breaking down below the trend line, maybe some of these lows come into play as support. But I really kind of think that we come down and test this major support level again. You don't want to be knocking on these levels too much, because you knock on the door too much and somebody's going to let you in. All right, Netflix. Really big 3-day move out of Netflix. It was looking like it was going to break down out of this rising wedge, which is what you expect. We had that little tiny hammer candle here, and then that followed up with a really big candle and some follow through. We are right back up to the top of that wedge, right under some resistance, that a target from another move, the gap fill. I think if you're playing this and you're not taking profits in here, you're not doing it right. I still see strength in this, and I think we can move into this gap fill. But I don't know, getting through that, that's asking a little much, I think, especially after this kind of move. I think the best thing you could see here is a sideways consolidation for a week or two and then break out of there. So yeah, definitely, it can't hurt to, if you've got a position in here, it can't hurt to trim some off. You can always add it back on if we break out, right? But that's not investment advice, because that's not what we do here. Okay, so let's take a look at Google. Google, we were looking at this bull flag, and it got kind of sketchy in here. It had some failed breakouts, tried to come out the bottom of it, but finally had a really big move out of there. A little of a pullback on Friday with everything else, but looks ready to get up and go. Finish closing this gap here, and potentially move higher through it. I think that this one can move through because we had this little pullback here after the big up day. I think we could just continue to grind higher and get out of this gap without having to consolidate here. We could just see a nice move higher, maybe up into this trend line here. Microsoft. Microsoft is a potentially interesting setup. We had a bull flag, broke out, pulled back into it, and then had a big move away from there. This is really nice, technically well-behaved price action. The pullback was a little bit hard, I guess, but it bounced where it should have, right? And now we are perhaps consolidating here. Now, it'd be nice to see this consolidate here for a couple more days. I don't think it's going to. If my thesis on the market is right, this is not going to consolidate here for a couple of more days. This is just going to move, right? Because if the market is going up, this is breaking out of here tomorrow. So you could play this. It's kind of a no-brainer on how to play that, right? Obviously, you buy above the highs here and with a stop below, or maybe a stop below even the middle of this candle or something, and away you go, right? And you should be fairly clear sailing up into this resistance zone up here in around the 270, just above 270. Tesla. I'm still a little bearish on Tesla. I think it's just got so much overhead resistance right now. It is definitely fighting back, but this is one that I wouldn't be surprised if this bucks the market trend. It looks like it wants to roll over here. If the market goes up, maybe we try and move up into this resistance. If it got up here and went sideways for a week or two, I'd probably be a lot less bearish. If it went up here and then you get a big red candle, then I was right. SMH, the semiconductors. Always messy, these things. I guess we're putting in a bit of a consolidation. We had an uptrend. I should probably extend this line up here. Might come into play. So yeah, we had a nice upward channel forming. We broke out the top side of that, and really since doing that, we've been going sideways. So maybe we're building a base here. It's kind of big and wide and messy, but maybe that's okay. This just says indecision to me. Let's take a look at AMD. It's still in its base. At least its base is tighter. You can see we had a couple of little wicks above the base. Not ideal, but it's still well within the base, and that's okay, right? We're not falling out the bottom of the base. Let's see. NVIDIA is going to be our next one. NVIDIA trying to break out of this base. Poked its head up, pulled back in, but holding here at where we had drawn this base. Does that mean we turn up? Maybe. Got that declining 200-day moving average overhead though. It's just, it doesn't look, it's not convincing what's going on here so far. I'm unconvinced and unsure how I would even play it. But there might be something there. XLV Healthcare, very strong. And you know, this is one that I don't mind seeing continued strength here. You know, because this is sometimes, sometimes this acts like a defensive stock or you know, defensive sector, and sometimes it acts like a risk-on sector. And this sort of behavior here seems to be risk-on to me. So I like to see that. Why is it risk-on? Well, because we have some nice moves now out of, or at least for the last few days, out of XBI, the biotech ETF. After coming back down towards this you know, bottom of the channel here and consolidated sideways and moved up, I think we're going to see more strength out of here, and it wouldn't surprise me at all. Let me extend this across a little bit. Would not surprise me if we break out the top of this channel. So that was biotech. All of the full-on defensive sectors, REITs, still, you know, grinding up. That's fine. If they're grinding up, that's cool. We don't want to see them leading, really, right? Especially right now when what we want to see leading is technology. But, you know, I'm okay with these continuing to go up with the market. XLP Staples continues to be quite strong, coming into some resistance potentially. And utilities. You know, also seeing the continued grind up. The uptrend line is in really good shape here. So that's good, you know, because you're probably by now, I would think, into some utility stock. You've probably moved into some of these more defensive areas for, you know, for value and for dividend and all of that. So you want to see these continue to move up. But we should be okay with these moving up slowly, because like I've been sort of beating the drum on, let's take some money and move it into technology. Or let's see the market take some money and move it into technology, because we want to see that proof that, you know, we are really going to get some risk-on moves here, and the bottom is in, and we're, you know, God, I fear saying, you know, a nascent bull market, but this is how bull markets start, right? You know, by putting in higher highs and higher lows, and that's what we've been doing. All right, let's see, looked at Google. Okay, one of our setups from last week that it was okay. ISRG, Intuitive Surgical, we were looking for it to break out of this base, and it did. I bought the breakout. I sold a little piece the next day when it started to pull back. I wanted to see that move some more. And I'm really glad I did sell a little piece, because that made it easier to hold when it gapped way down right to that breakout level again. Now it bounced, as it should. So it's not, I thought we'd have a much stronger move out of here. So I'm not totally thrilled about it, but I'm okay with it, especially having taken some profit off near these highs. You know, taking a third of the position off now, got a nice gain in here, and you know, my stop is now just below the high of this candle, this breakout day here, just below the high of that. So, you know, I will have a profit no matter what happens. Well, unless there's a massive gap down. But yeah, you know, if anything happens, whatever happens, you know, as long as we hold above my stop during regular market hours, then I will have a profit in that one. New setups. We talked about Apple. That's on my list here. DraftKings. I know we've been looking at this back and forth a lot. My opinion of this is back and forth. Remember, I pointed out how every time we got to this trend line, every time we got above the 200-day moving average, we pulled back hard. And I expected that to happen again when we got up there. It did pull back, but it pulled back only halfway hard. You know, you only had a 2-day pullback, and then we started to bounce up. Well, look where we are again. We're right back into that downtrend line and the 200-day moving average. However, after a really light pullback, and this looks like we are going to break out the top of this. I'm not entirely sure I trust it. It's certainly not my favorite play here, but you know, if we get out of here and start going, you know, this could really go. So if you can find a low risk entry in here, and you're very nicely risk defined, this could be a nice play. And you know, maybe buying some cheap options on this is the way to go. What are we at? 1550 here. Maybe buying a 17. Or, you know, yeah, I'd say a $17 strike is probably reasonably cheap. You got to buy some time with it. But if this gets going, it could make a move to 20. So, you know, you can do all right on a $17 strike. That might be a play. I haven't looked at what this is going to cost in here. So I should do that tomorrow morning after the market's open and we see, you know, fresh option pricing. I'll post it in, if I find something juicy in here, I'll post it in the options channel of the Discord. And if you're not in the Discord, there's a link below in the description where you can check it out and sign up and give it a try. You know, come see what we do there. We every day we're finding new setups to go and play. All right, another new setup here that I'll be watching. Is Dolby Labs. Now, we've had a really big move here up into this pivot resistance, and you can see it stalled out. I don't want to play a breakout of this yet. I want to see some consolidation for a few days. But this looks like, you know, and I may be wrong on consolidation and this keeps going. Well, if it does that, it's going to go without me because it's had such a big move. What's our move in here? And, you know, I mean, if we come off, well, I don't want to come off that low, but let's come off of this level here. You know, that's 10%. You know, that's a fair bit for this stock. Its ATR is 2.5% a day, so that is a fairly large move. So, you know, what we want to see is, you know the drill. We want to see consolidation in this area for a few more days and then break out. Watch out for this this strong resistance here. Let me show you what's going on here. And one of the reasons that I'm kind of looking for an entry down here is because we've got this major resistance level here. And I think we can make a couple of bucks on the way to there. And I think that when we get there, we do another consolidation. So I think that, you know, what we're looking at here is an early entry for a breakout out of this major resistance level. And you can see this giant consolidation in here, right? I mean, really, everything we've done so far is consolidate, you know, below this level, this 79.50 to 80 area, you know, that we've been consolidating in really since this big down move on earnings, which was back in February of this year. So a little early entry on the move to here, catch a few bucks, maybe take some of the position off as we come into this resistance, wait it out by the breakout again coming out of this one after it consolidates, and away we go. Because then I think we have a fast move to 88, possibly even 96. So could be some interesting stuff going on here in Dolby Labs. OKTA is another one that I'm looking at. So, again, this one I believe needs more time, but you can see what I'm watching here, right? Some people will just play this either up or down out of that range created by, you know, the high and low of Thursday's candle. I would prefer to see some consolidation in here. You know what I'm going to say, right? It's going to be either just underneath that gap, kind of like that, consolidate in there, then break out. That's buyable to me. And finally, here's our last one. I promised you another solar stock with a nice setup. This one is Run, R-U-N, Sunrun. Look at, I mean, you know, this is obvious what you need to do here, right? I don't need to explain this. But it is setting up quite nicely in my opinion. So there you go. That is our market, our setups. There's some interesting stuff. A lot of it needs maybe a couple more days, but the market might not give us a couple more days because the market is set up nicely to move higher on Monday. Let's take a look at our calendar. I think, so on Wednesday, we're going to do something different, and I think it's going to be a lot of fun. I'm really looking forward to this. We're going to, this is suggested by the members, Eli and Marion, or Eli, it was Eli's idea. Marion was really into it, and some of the other members were really into it too, and it was brought up, is doing a kind of day trading roundtable. We're going to be doing some day trading lessons, a quick little sort of overview of day trading, quick little day trading lessons. But, a lot of the people are day trading anyway. And what I thought would be really cool is if members bring, a ticker that they have day traded recently, and even a chart, and more than welcome to share your charts during the meeting. And we're going to analyze the day trade, how you traded it, why you traded it, really get deep into it, and talk about what was going on, with the goal of obviously of improving your skills, right? Having a bunch of other people to look and say, hey, did you see this or that, or why is it you did that way? And I think this is going to be a lot of fun. I think it's going to be really, really educational. And if this works out, and if the membership likes this, I could definitely see doing this at least once a month. And I think it'll be a lot of fun for everybody. So that's coming up on Wednesday at 7 o'clock Eastern. And then following Wednesdays, the rest of the month, even in the middle of the Christmas week there, we are going to be doing Ticker Talk as usual. We'll be doing our weekend briefings as always, and just a little note here, we've added into the calendar, and you can subscribe to this calendar, by the way, if you want to. You will have seen the note about that in the Discord. But equity markets will be closed on Monday the 26th. Obviously they're closed on Christmas Day, which is a Sunday, but they're going to be closed on the Monday as well. That is about all I've got for you. Thanks for coming out. Thanks for making this this far. You guys are heroes. Hit that like button, share it with your friends, and subscribe. Enjoy the rest of your weekend. Have a great night, everybody.